How can you go? Death row. What a brother know. Once again, back is the incredible Wayne Animal. Hey, good morning, everybody. Are you alive? Happy Tuesday. Coming Telefu, thank you for being here. We're going to cover gold, oil, Bitcoin, dollar pairs, yen pairs, risk on, risk off. All kinds of things. So thank you for being here. Thank you for being a subscriber. Thank you for being in my life. Thank you for being patient and patient with me over the last few weeks as I went through finals at Harvard. And then thank you for all the discipline you put into working hard every day. I appreciate you. I like you. You is good people. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never, ever, 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 ever risk money you cannot afford to lose. Hey, my name is Wayne McDonald. Forex.Today is a community of foreign exchange traders stationed around the world. Over 13,000 of us. What we do is we meet and align our satellites every morning. This is about London lunch. This is about the New York Open. And what we do is we get together and we say, what's going on technically? What's going on fundamentally? What's going up here? We take all this information as a community and synthesize it into trade plans. So I preach to teach, because some of you never had this. So the overriding goal is to make you a better trader. Cool. Maybe this better trader is a more profitable trader, a more consistent trader, maybe lower volatility trader. Okay? And that's the best kind of trader according to Trader's Way. So that's why they are the sponsor of our community. They like the fact that this group helps you sort of develop the skills necessary to succeed long term. And they'd like you to be successful long term because, quite honestly, it's a symbiotic relationship. If you're a successful trader for years and years and years and years, and you're with Trader's Way, they'll execute those trades for you and therefore earn an income. So they're like, hey, we want successful traders. And so that's why they help us. So that's cool, right? So please visit tradersway.com, open up a demo account just to say thank you. Just to say thank you. Just to say I'm a part of the community and I want you to know that and I value what you do for me. And one day I'll open a real account. That'd be great. So anyways, let's go. Nice to see you. Okay, let's see what's going on. Now, yesterday and the day before, we were sort of log jammed. Could be bullish, could be bearish. Could be bullish, could be bearish. And the interesting thing about the could be part was bulls did what bulls were supposed to do. Bears did what bears were supposed to do, but we didn't have a clear idea on direction. Now, maybe we still don't, but we might be getting closer to that, okay? So let's look at a whole bunch of failed trade plans, okay? Yesterday I did essentially risk off with the live trading group, but we knew we were log jammed, right? This is where a bear would sell, and they did. This is where a bull would buy, and this is where a bull would buy, and they did, right? So we had this on a lot of currencies. So I said, you know, one of the questions I posed to the live group was, hey, man, do you have to trade in the next 24 hours, or can you wait? Like, what do you want to do? Right? That's what I said. I'm like, hang on, I got to get my drawing tool back out. I don't know why it keeps going away. I guess I keep turning it off. I said, look, are these the market conditions you've been looking for? Is this the compelling reason for you to drop real money on this market? And if the answer is no, then back off. Wait, you're the boss. You don't have to trade. The market's not the boss. You're the boss. If you don't like it, take a walk. All right, walk away from the negotiation table. That's how I look at it. You're like, forget it, I'm out of here. We're not interested in negotiating anymore. That's a real power. Okay? All right, so anyways, so with that in mind, we had basically a flip of the coin. The group was 50-50 last night, and that's important information because the market was probably 50-50 as well. So we had one of these scenarios where were we? I forget where we were on this one, but it was one of these things like you kick off to 21, because you kicked off the role reversal, and therefore it will make a lower low. And you're like, what do you mean, therefore it will? Well, whoever sold here was a bear. Unequivocally. Love that word. Because that's exactly what a bear is supposed to do. So we know bears exist. And we also know bulls exist because that's exactly what a bull would do, based on price action support, but also on market action support. All right, cool. So we know the bulls and bears are there. And at that moment, last night, you know, whatever it was, 5 p.m., so 15 hours ago, okay, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, okay. So 15 hours ago, we're like, bears are going to need to sell, or I don't think they're actually bears. Okay? This is where we were. It's not that they're going to, it's that that's where they should. That's what a bear is supposed to do. Okay? So what happened is this thing dropped in Asia and the London boys bought it up. Cool. We call that the Asian fade. It's actually kind of what we're looking for. It doesn't always happen perfectly, but you know, if you're a bear, you have to sell that or you're not really a bear. So what did we learn here? A higher high is quite important technically. Okay? A higher high off a double bottom is technically important. First of all, that's risk on. You'd rather take your money out of your U.S. bank and give it to the Queen of England. All right. Seems risky to me. Okay. All right, Jong says, I've heard about Forex, watched multiple videos about it, but I always get confused. Good. The first place to start is using your ears. You got 2 ears, so pop a squat, put in a year of just watching these videos live. Okay, and then we'll get there. All right, so anyways, I think this is very telling because bears were supposed to sell. They, in fact, did sell. What happened? There wasn't enough of them. Okay? Wasn't enough of them. So we're back to this resistance. And you're like, well, Wayne, we still haven't broken resistance. Yes, good point. But what would a bull be looking at? Okay? They're going to be looking at this on a higher time frame. Okay? Like, this might be the 4-hour point of view. Because if you look at the 4-hour point of view, you take out, you know, 75% of this noise, 75% of that noise. So you're just looking for a double bottom up. Okay? You follow me? So now on a smaller time frame, they're going to play a double bottom of the double bottom, which you hear me talk about a lot. So now you got the double bottom, right? The right shoulder of a double bottom, right? Double bottom of the double bottom. And now what? Higher high. So what's the secret word? Thoth? What's the secret word? Hammock. Now, it's a long story. I don't want to get into it. But that is the secret word. And the whole point there is people have heard me make this speech so many times that there's a secret word and everybody knows it. Cool. So that says, well, then whatever I'm talking about might actually be repeatable. Cool. So what we're looking for now is a higher low and a higher high, which will breach this resistance. And off we go, H-O-T-T-O-G-O. Right? Pound is hot to go. H-O-T-T-O-G-O. Ooh, hot to go. So anyways, yeah. So I think this would be very interesting, especially if that's not the only thing that wants to go up. Okay? Especially, so if we look at everything else and it hasn't made sort of an interesting move, then this is a relative strength issue between pound and dollar. I'm not really interested in relative strength issues. I'm interested in macroeconomic differences, which are much longer term. Hey, what's up, Davey? Boom! Okay, so let's take a look. and see if it's just an isolated issue. So let's look at the euro dollar, and this was a very similar setup. Like they say in Canada, it's the same, only different. And we thought, well, if this was going to continue down, which is risk off, we need the big push in London, breach the old support, and therefore bears are going to take it down to the target. Well, what's the target? The target is way down here on a monthly basis. The target is down here on a weekly basis. So that's where we're going, right? I always start out with, all right, where have we been? Where are we going? So whoever sold here, what was their intention? Remember, intention. What was their intention? Their intention is to bring it down here to 106.5. What was their intention here on Sunday or Friday after NFP? They were going to take it down to here to 106.5. So guess what? I don't know if we're going to get to 106.5, but I know these guys and these guys are trying to get it down to 106.5. What's going to stop them? Where's the fence? Where's the line of defense? Where's the Alamo for bulls? Well, bulls don't have much of a case, right? If we're below this. So that's why our plan here, if you were a bear last night, is to breach this support, retest the support. Now the support is resistance, and you drop it like it's hot. But if it don't do that, that's very interesting because we are on the DMZ, so to speak. All right, the event horizon. Right? If you breach this, there's no coming back. Okay? Because there's no buyers until you get way down here. And it's not really buying that pushes price up, it's profit taking. So anyways, another interesting sign where here's a double bottom, right, on a bottom, on a monthly pivot, so on and so forth, on a WM2. So if that holds, we're going way back up here. Full Monty, back to the top. You got it? So remember, you never know. You don't know, but we can see that this isn't trending. And you can see this isn't trending. So there's like contingency plans. If-then statements. If you break this, then we're heading down here. If this broke up here, then we're going up there. But until then, we're moving sideways. So what's the rule of trading ranges? What does the book say? The good book. What does the good book say? This will stay range bound forever. Okay? Not sell at resistance. Not sell at resistance. That's not the interesting part of it. Okay? Okay? Was that, you got, oh, forever, ever? Oh, I get it. Yeah. I'm like, what outcast does he oh, yeah, I know it. Forever, ever? So anyways. Okay, so that's also a risk-on move. Interesting. There's the target. Interesting. And it's only Tuesday. Perfect timing for a turn, yo. Right? How cool is that? Ice cold! All right, so here's another interesting one. Okay? We were in this last night with no direction. Okay? And we may finally have gotten direction because now we got an M2 play, or M3 play. The interesting thing is bulls have done their move. Okay? This is what bulls were supposed to do, and they did it. This is what bears are supposed to do, and they did it. So that's cool. Yeah, Joe. Yeah, the tough part is margin on lira right now. Because now, like, if you hold it for a year, I think you get like what 50% return on investment, not 9,000, or instead of 1,000% a year, you get 50% a year because of the change in margin. But whatever. All right. So, anyways, so we don't know where this is going to go, but everyone took their shot on Monday, or everyone took their shot on Tuesday, and they're in. Boom and crash indices, like there's an indicator for it. What, based on business cycles? Boom and crash. It just sounds like a marketing toy. Not in, you'll have to send me a link and I'll take a look at it, and maybe we can talk about it tomorrow. I'm happy to look into it. I'm very wary of tools that are like, hey, you don't know what you don't know what any of this means, so I made a tool to dumb it down for you. Those types of things, like, I'd rather teach you about business cycles than give you an indicator that says, yeah, use this to measure business cycles. Well, what does it do? Oh, don't worry about that. Just. So anyways, okay. Yeah, well, I don't know if you're asking me to do VIX. I mean, if you want me to do VIX, just ask me VIX. Okay. Baby says, hey, Wayne, which time frame do you normally wait for a higher high, higher low? Well, I want all time frames. Okay, so all time frames. The thing is, like, let's say we're back here on Sunday evening. Okay. If I'm a bull, 1,000% chance I'm thinking this. Do you understand that? Like, if you don't get that concept, everything else is irrelevant. Okay? Okay? So, when we're there, I can see it on a 4-hour. And I'm usually planning on a 4-hour, okay? I plan on a 4-hour. If you remember the name of my book, it's called Strategic and Tactical Forex Trading. So always start with strategy, believe it or not. Okay? So my strategy, even way back here, the last day of April, my strategy would have been this for the month. Okay? That's a front run off of a double bottom. Or I patiently wait and take this off the bottom. But if I'm a bull, that's it. Okay? That's a risk-off move. That's U.S. stock market coming down. That's oil coming down. That kind of thing. Okay? So that's called a strategy. That's my plan. Okay? So it puts me long at prices like this. Okay? Because here's the thought process. Up, down, buy. Up, down, buy. Up. That would be a very, very typical process. Okay? That's what I'm hoping for. Okay? But hope's not a strategy. Okay? But that's what a bull would be thinking down here. This is the exit. There's the front run. There's the second wave. Here's the third wave. And then we approach exit. Okay? So it didn't work out perfectly that way. So if you were a bull, you would have made money here. And then you would have put another one here. And for, only 3 days were profitable in your second trade, and then collapsed on you, so you take a walk. Cool. Now, it's very regrettable. You'd rather be up here by now, but here's a second shot. This is all based on you filtering all the noise with your lens, your bullish lens. Okay? So you try again here. Now, the question is, what time frames? Well, that's all I do on a 4-hour. Okay, now I might zoom in and say, oh, right, so, there's a top here, and then here's a top here, and there's a top here, so as long as we're below this, I'm a bear, and all that kind of stuff. But as a bull, I'm kind of waiting, right? I'm waiting for it to reverse here and suddenly turn green, in which I can enter long. So I filter all the bearish noise out. Well, I guess not completely. I use it to analyze risk, okay? But all on a 4-hour. So strategy. I want to be long here, and there's going to be a second chance here, and then we're going to be up here by tomorrow. Okay, cool. That would be a general idea. Okay, now get off the 4-hour. That's the strategy. So I know I'm probably going to buy around this area. Okay, it's just price action, and I'm defending this price. Okay, cool. Okay, so in fact, what I can do here, I'll show you. I like to leave little notes for myself. So I'm going to say this is an interesting area. Okay, we call that a roll reversal. And then ultimately this is my line of defense, but I don't want to even touch that. Okay? All right, cool. So now we drop into like a 15-minute chart. My strategy is done. Now it's tactics. Okay? Yeah, Baby says, yeah, I find hard to find space as there's, positions and support, resistance, support, resistance. You got to filter all that out. Okay? Okay? You got to filter all that out with your bias. Remember, if you don't have a plan, right? If you don't stand for something, you'll fall for anything. That's how I look at it. So you're like, I don't know what's going to do. I guess I buy here, and then I guess I'm going to sell there, and oh, I guess it's bullish now. All of that is signs of a fallacious process. Okay. So now we're in our zones here. They're just zones to me. They're not exact prices. Sometimes they are because of psych levels and stuff. Okay. But what I'm looking for is now confirmation using technical analysis. I'm not trying to decide what to do. I'm trying to decide at what price and well, not even that, at what time. Okay? Remember, on this side here is price. On this bottom here is time. We trade in a price-time continuum. Two-dimensional world. So there's only two questions. At what price and when? We already know the price. We got this area here, what we call roll reversal using price action. Cool. So now the thing is, when do you pull the trigger? When do you pull? See? I'm not asking, what am I going to do? What, is it going to go up? What's going on? Filter all that out with my strategy. If it's going to go up, it's going to go up here. What am I looking for? You can use the 5-8 cross up. You can wait for a 2155 cross up. You can change to an even smaller time frame if you wanted. Okay. You can do, you can add an oscillator. Okay. Whatever you want. That's a cool thing. You don't have to be mechanical like, okay, Wayne says now on step 14, I need to look at a stochastics and then if that is, no, you already know your price, you know your time. Pull the trigger any way you think is appropriate. Okay? If you want to wait for a 21.55 cross on a 5-minute, here's what's going to happen with price. The only way to get that is this. So that's what you'll do. This will roll up, this will roll over, and you'll be long here on a 5-minute chart because you waited for. Is that the right thing to do? It's one thing to do. What about trading a 5A cross here? Well, that's more aggressive. You have less confirmation, but that's also legit. What about waiting for this to rise, fall, and rise, but be above this level? Yeah, well, the only way to do that is up, dun, 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 down, da, 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 da. And I've taught you guys so many times recently on how to trade the stochastics. In fact, I've taught you the math of the stochastics. So now you can anticipate that happening while it's developing. So you're like, okay, this is going to be up. That's going to pull that overbought. Then it's going to hit this. And then it's going to make a higher low off a roll reversal here, which will drag that down. But therefore, then it won't make any lower lows. And it'll wick up higher, which will turn this back north. And then you'll be long. And that's a long-winded way of saying, Okay? And you're like, well, how do you know it's going to go up? Well, first of all, nobody knows if it's going to go up. But you have a strategy first, and now you're using scientific methodology to confirm or deny your hypotheses. Your hypothesis is up. Okay? Now, here's the conundrum. Risk on, risk on, risk off. What? So make sure you got a sound strategy. Let's take a look. Hey, remember Bitcoin was going to be the end of the world today? How was halving for you? Was it as exciting as you thought it would be? Good. Support held. Nice. All right. Bum, 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 ba, 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 ba. Well, Joe, it's just another way to push more money into the economy. It's a very strange move. It increases money supply exponentially. It does seem reckless, but here's the thing. So you're talking about, okay, 1 over R plus E. Okay. And in a typical world, in a typical normal world, bank executives are going to deploy all excess capital. So then in a sort of a normal typical world, you just have 1 over R. But right now, because banks are so capitalized based on what happened in 2008, what happened is there's too much E. So the Fed has come along and said, well, let's try to fix the formula and say, well, if you're going to have all that E, let's cut out some R. So now they've just changed the formula to 1 over E. And it probably ends up being the same thing. And what they're trying to do is force the excess out, and then they'll probably put the reserve back. So they're just, I think they're using it as sort of a mathematical trick to balance the equation. Okay? So I think it seems reckless on paper, but if you're like, okay, it's just a mathematical trick to balance an equation, then okay. So either way, they get the right money multiplier. Okay. Now the funny thing is, so this is what I teach you in the fundamentals course, where we go over the money multiplier math. And so I learned this multiple times, obviously, in school, and then I got to that. I took that class with the Fed, right? So my macroeconomics professor was a senior economist at the Fed at the time. So he'd literally leave his desk at the Fed, come to Harvard, and teach me macroeconomics. Really cool. And he's like, hey, man, you know this whole money multiplier thing? Of course, he didn't talk like this because he was like an extremely serious nerd. I liked him, but he was like not a friendly dude. Just didn't have the personality, right? So he didn't say, hey, dude, you know that money multiplier thing? No, he would just like open his mouth and just economic gobbledygoo would come out. But so he took this thing, which I fully understand inside out, excess and required and all that kind of stuff. And then he's like, but he explains everything in a much, 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 much more complicated math than that. And so like he'd fill the whole board with math. And I'm thinking, wait, is he trying to tell me 1 over R plus E? Right? But, he's using calculus to explain it. And I'm like, oh my God. So, yeah, 1 over R plus E. Yeah, crypto, well, I'm going to probably take a nap today and then maybe put some sun on my face. And then I'm going to go through and get everyone fixed. So I'm not sure why that suddenly happened, but I'll go figure it out. Well, Joe, money well spent. Okay? So if I'm meeting with a potential investor, image and reputation is supremely important, more than even reality, right? Reputation. So if I say, I have 2 degrees from Harvard, right? Boom, that's really good. And then so I spew some sort of macroeconomic stuff, and they're like, "Wow, you're really good." And I'm like, "Well, a senior economist at the Fed personally taught me macroeconomics and how they do the math at the Fed." And they're like, "Someone at the Fed taught you macroeconomics?" And I said, "Yeah, well, actually, a couple. So I've had 2 professors that that have worked at the Fed." So I'm like, so I know how the Fed works. I know their math. I know their thought process. I know their policies and procedures. The Fed personally taught me how to trade. And it's a hell of a story. It might be bullshit, but it actually happened. It's factual. But I have debated minimum wage with someone from the New York Fed. I have learned macroeconomics from a senior economist at the Boston Fed, right? So it's factual. It happened. It's just a hell of a story, and you know what? Stories sell. So if I have to stand on a stage and convince someone to give me $10 million, or he's going to give someone else $10 million, I have to have the better story. Okay? So money well spent. Thank you, Harvard. Drop that cash. Okay? So we'll get that when I do my mastermind group. We'll get you there. We'll get you there. All right. Now at least you'll say, well, my personal mentor, I have a macroeconomics degree from Harvard, and all his professors were from the Fed, and now he taught me everything he knew. It's a hell of a story. And it matters. All right. So WTI, whoa, we made it through. So anyway, right? Do you guys remember, was it yesterday? Yeah, it was yesterday. We had the out of position ride the 4-hour 21 plan. Yeah, Javier. I mean, it's just reputation more than fundraising. No one's going to give you money because of that, but they may place a little higher value on you versus somebody else. Okay? It's like you only have to be 5% smarter than your client to look like a genius, and you only have to be smarter, 5% better than the competition for you to be the best choice. You understand? So you don't have to be the world's greatest, you just have to be 5% better. Okay. So we had pound dollar doing this, we had euro dollar doing this, and we have oil riding the 4-hour 21, which is doing this, which really makes that CAD move weird. Okay? Makes that USD CAD going the wrong way. Okay? Which means all of this is going to collapse, or your USD CAD is going to do this. It's been up all day, and all of a sudden, boom, it's going to come down. So you might watch the US kitty CAD. Okay? You might want to watch for it. Guten Morgen. Yeah, the next wave of bad news. Well, I don't know if there's, don't think about it as good news or bad news, guys. So let's do this. Let's think about this. I'm trying to teach you that news is just data points. Okay? We already know the situation. News is really, truly, mostly, not all, but mostly irrelevant because we already know. We already know the situation. The world's been shut down by COVID-19. Bad economic data. Gotcha. Okay? And then we know the world is slowly opening back up. Now, in a staggered process, but that makes, on a human needs or on a health issue sort of basis, that makes total sense. So we know we're slowly tiptoeing back online. Great. Which means between now and, I don't know, some form of the near future, let's say by now and the end of the year, economic data will slowly improve. Business activity or economic activity will slowly improve, and restaurants will start to open, and then casinos will start to open, and people will start to travel, and people will buy cars again, and it all slowly comes back. Now, it's a sea change, very slow, like a bottle moving with the waves at the bottom of the ocean. Eventually, it will become sand, but it'll be a slow but steady process. Somewhere in there, things will improve, and then you look at where you invest your money, and you're looking at companies that have fared pretty well, some that have been horribly hurt by this economic activity but suddenly survived, and now their activity is coming up. So now you can look at improvement of earnings, and then you can look at earnings per share and percentage increase of sales and an improved inventory turnover, and you start looking at fundamental analysis of individual companies, a form of microeconomics, and then you will be able to make wise investment decisions. But we also know there's more to it than that, that there's a dichotomy between the economy and the market. We know that. And we've had this giant rally. So I think we're officially now, since the March low, 50% higher. On average, the S&P 500, I think, is up 50% from the bottom, which means the average dog on the streets lost 15% of the portfolio over 30 years, or let's say you got 15 or 20 years to go, or let's say you even got 10 years to go. You're likely to make that back and more. That's why you should be a long-term investor. So really, it'll be memorable, but it could have been a hell of a lot worse. Thank you to the U.S. government, and thank you to the Fed for pumping $6 trillion into the market. Oops. And saving us. Great. Now what? Well, now we find out, whoa, it could be 6 months to a year before economic activity returns to back to normal. So the honeymoon might be over in the next few months. Okay? And that will bring risk off back. Question is, what are you going to do about it? Not that it might happen or that kind of stuff. If that happens, and we have another dip in the stock market. Let me say it again, because I said it last time, and I think most people, maybe everyone, ignored me. So let me say it one more time. Create a list of 10 companies you would like to buy simply because you think they'll be around 25 years from now, and pick a price in which you would like to buy. So, 5 weeks ago, you could have bought Starbucks, which is $100 a share company, for $50 a share. Could have bought it. Coulda, shoulda, woulda. Can't save your way into prosperity. Can't save your way into getting rich. At some point, you're going to have to take risk, right? So let's do it again. If the stock market has another decline, are you going to buy something? What is it? And remember, you don't have to do inventory turnover analysis. You don't have to do earnings per share, which is stupid anyways, analysis. You don't have to do any sort of analysis fundamentally. You just have to say, yeah, I think Home Depot is going to be around 25 years from now. I might argue that that's your point, right? I think it's easier for Home Depot to stay a brick and mortar company than maybe Walmart. Because Walmart might turn out to be Amazon.com 2.0, right? And all of a sudden, every Walmart store in 25 years could go away and you just buy Walmart stuff online, which would be a better experience, in my humble opinion, right? So that could be debatable, but you can't buy lumber online, or can you? I don't know. So you make these decisions, okay? Right? So anyways, if there's another decline in the stock market, do the analysis now. What will you buy? And what is the price? Because you're going to have to call your broker and say, buy it at this price. Because they're slow as molasses on a cold Georgia morning. Takes them probably 48 hours to enter a trade properly. Okay? So anyways, I think it could be very real that there's a honeymoon now. Like the honeymoon's going to be over and say, okay, thank you, Fed, for the $6 trillion and propping up the stock market, but we've gone too far, too fast, too stretched out from reality, and no one with this amount of uncertainty will pay the prices that stocks are now. You get it? So, I don't know, Carnival Cruises was what, $6? Then it went to what, $18? Do you want to buy it at $18? You're like, wait, people are still not getting on cruises. And it might be a long time. There might be health issues. Governments might not even let them on. And then when the government allows it, what percentage of cruisers will believe it's safe? And what percentage will not trust them? And what about that new debt? How expensive was it? And if they don't have the cash flow, where's the profits? And all of a sudden people are like, there's no way that's an $18 stock. I know, right? So what if it comes back down to 12? What if you could buy it for $10 in July? Would you buy it? Okay? So let me throw out one more wild and crazy guess about the future. Okay? Do you mind if I do that? To talk about what's going to happen between now and the end of the year, and then you can use that to look out for yourself and hit a problem, and analyze the market and add this sort of to your filter. Now, I don't know the future, so it's a wild and crazy guess. Okay? All right. It seems like Biden's walking around with nothing to say. And this is really one of the things I analyzed in school, I think about 3 years ago. So we analyzed the message of presidential candidates, okay? And when their message, their platform is things like Make America Great Again, which was Trump, but also Obama was about change, about making the country and the world a better place, more fair and more everything, right? Change, change, change. win, win, win. And it goes all the way back to the Kennedys. If you talk about changing and making America great, or whatever your message, changing things, changing the status quo, you win. If you're self-indulgent, if you're, what's the other word for it? If you're, what's the other word? When you're focused on yourself. For example, I'm with her. Hillary Clinton is saying, join me because I'm a woman. Elect me because I'm a woman. It's not about Hillary Clinton. That's where her message was messed up. And by the way, I'm not picking on her. It goes back to every single presidential campaign going back to before John F. Kennedy. If you're like, I'm Joe Biden, I'm the only one that can beat Trump. You just lost because nobody cares about you, Joe Biden. They want to make the world a better place because it's pretty messed up right now. Okay? So Trump was actually pretty good about that, where he's like, look, you don't like me, I'm an a-hole, right? But I'm going to screw over all these Washington politicians and change things up. You win. That's how you win. So anyways, so Biden's going around, I'm better than Trump, I'm better, vote for me, vote for me, vote for me. And Trump's like, the world sucks, it needs to be fixed. So, yeah, thank you, narcissistic. But anyway, so like I said, it goes all the way back 50, 60, 70 years. We analyze the data. It really comes down to the platform that you're promoting. So, anyways, here's what I think is going to happen. Trump wants to control, and I did talk about this a little bit a couple of weeks ago. Trump wants to control the message because, well, Biden doesn't have a message. So he's going to control the message, and what is he going to say? China is bad. They screwed all this up. I already fought a war with them. That's only round one. They're not even living up to round one. You can't trust them. In fact, look, they created this COVID-19 and they lied to the world and they're evil and they're bad. And I'm the only one that will stand up and I will champion. I will fight for America. I will save the world. It's China. And Biden will say, I don't like him, and nobody cares. Right? So a couple of people are getting blocked because they're saying bad things about Trump. This has nothing to do with Trump. So get off that nonsense. You're an economist. Shut your political, whatever off. I'm trying to teach you how to make money. So I don't give a damn about Trump. I'm Canadian. Who gives a crap? Okay? I want to make money. So he's going to control the message. What will the response be to the message? See? Think smarter. Get off this, I'm a liberal, I'm a conservative. Oh, who gives a crap? The whole country is deadlocked. So get off that, right? I don't care about your political opinion. I don't care about anyone's opinion. All right. Cool. Yeah, risk off. So, are you going to make money, yes or no? Okay. So this is my crazy guess. But I think it'd be a genius move. Because again, Biden's like, I'm the only one that can beat Trump. Nobody cares about Biden. They care about themselves. So now if Trump comes out and says, China's screwing you over, they're the ones that caused this problem. They're liars. Americans are being hurt by this economically, but now are actually under attack by this virus that was created in a Chinese lab. And you need me to fight for you. I can save you. I can make your world better, which is way different than I can beat Trump, right? So anyways, so I take all of this, and of course I'm being a little facetious here to make my point. I've done the data. I've done the research. Okay? So unless you've gone back 60 years and analyzed every political campaign in the United States and their platform, then you just take my word for it. Okay? Okay? Because most people have political opinions. Like, I come across people all the time, and I have friends that just absolutely hate Trump. They turn red in the face. And then I'm like, have you ever read his book? No. Why don't you read his book? It's actually pretty interesting. You really get to know the man, like the person, like how he actually goes through his daily life, day by day by day. The first half of the book is literally just his journal, who he talked to that day, what he was thinking, what he did next, what, you know, and then the next day comes in and you'd really get to like know him on more of a personal level. And they're like, no, I don't want to read the book. What do you do when you're biased and you know you're biased and you don't want to change? So anyways, so that's not what I'm talking about. I'm just talking about 60 years of political data I've analyzed. And now I'm making decisions based on the analysis. Okay? Cool. So if that message plays out, you will see this worry about another trade war. In fact, I think he will throw down a trade war. He'll get reelected because his reality is more personal than Biden's reality. Biden is stuck in his own reality. Okay? You know, I'm telling you, like, now that Hillary Clinton's got her own, like, documentary and she's doing a book tour and all that kind of stuff, like, I saw her interview. My wife said the Netflix thing was pretty good. And I'm like, yeah, well, I saw her on Howard Stern, which I thought was really weird. Like, wow, she's on Howard Stern. So I listened to it. You know what? It was a fantastic interview. If she had just been Hillary Clinton, she would have destroyed Trump in the first election. But she listened to too many people, got too political, took too many other sides, was very confusing. The white pantsuits killed it, I think, and the radical this and the radical that killed it all. If she'd just come up there and been herself, she would have easily won hands down. Okay? If she was just, hi, my name is Hillary, and I want to make America great again. Like the same thing. So anyways, if it goes the way I think, there's going to be a risk off, guys. Okay? And you'll be able to get buying opportunities. Now, here's the thing. I think either way, the stock market's going to go up, but not until November. So we're going to have to like play through this bad news, good news between now and November. And then November will be the big decision. If Trump wins, the stock market goes up. If Biden wins, the stock market goes up. I got a question here. Why did nothing happen on halving? Well, first of all, it dropped from 10,000 to 8,000, so that's not nothing. But how about this? Everyone's long and there's no sellers. See, here's the problem, and I talked about this, I think, last night with the live trading group. Let's say you have a $100 bill. You can leave it in the bank and earn interest. Or you can take it out of the bank, go to the store, buy some milk, buy some eggs, and buy some toilet paper, if you can find it. Okay, cool. What about Bitcoin? So you bought some Bitcoin. Now what? You own some Bitcoin. It goes up in value, goes down in value, just like the dollar. Good. All right, go to the grocery store right now, buy some eggs, buy some milk, buy some toilet paper, buy some beer. Oh, wait, you can't, they don't take your Bitcoin. Huh. So there's like, right? There's no out. It's like everybody's long, so to speak. Okay? Okay? There's no counterparty, so to speak. It's not truly as liquid as you think. If you can't walk into a grocery store right now, pull out a Bitcoin and buy a 6-pack of beer, then it's not liquid. Okay? That's, I think, a big part of it. It's not as liquid as you think. There's not a counterparty to your exit. So anyways. All right. So whatever. Okay. So let's just move on. So we're going to have a very interesting 9 months together, guys. And you're going to have to get better at the dichotomy of economic activity and the market. And the market, I think, is going to be much more affected by the political cycle in the next 9 months than the economic cycle, because we already know the economic cycle, and the market has already been bought up. So now it's like, what happens next? Well, those that bought too late, like, look, if you bought Carnival Cruises and you own it at $8 or $9 or $10, you're golden. You're going to move your stop to break even. You're done forever. If you bought Starbucks at $50, you're going to move your stop to break even. You're long forever. So on and so forth. MGM Grand, if you bought it at $8, it's at $16. As far as you're concerned, you're long forever. And if you get break even, so be it. Nothing ventured, nothing gained. But you bought it at 8, you're going for 50. Okay? So that's that. If you bought these things too expensive, you will lose money, and that's how it happens. Right? Those that are reactive lose money. Those that plan ahead make money. It's pretty simple. Okay? Remember how I opened up my book with The Art of War? Sun Tzu said, an honorable general will win, or a victorious general, no, an honorable general is victorious because many plans have been made. An honorable general is victorious because many plans have been made. Okay? So those that plan ahead win. They're victorious and honorable. If you're reactionary, you buy it late. Hey, there's going to be a dip. Trump's going to create it. It's what happens. And you paid too much, and now you're going to lose money. Okay. But someone else might buy it at the lower price because someone else is getting stopped out or actually losing money, and you'll buy that loser, that dog with fleas that they're crying about. They're like, oh, I paid $17 for MGM, and now you're getting kicked out at 11. Hey, I might buy it from you at 11. Sounds good. So now you have to create those plans. Many plans. If you make many plans, you will be victorious and honorable. There's a reason why I put it at the beginning of my book. Cool. So keep all that in mind. So yeah, here we're stuck here. So we're still rangy here. So that's interesting, but you might have this going on. Well, we do have this going on. Let's do it this way. Slow and money, right? Well, grind. I think if you're interested in money and how cryptocurrency might work, like, again, I don't know much about crypto. I'm not one of the raving fans, so to speak, but I like money and I like to trade things and I like making money. I don't even like spending money. I like making money. But anyways, okay, so it has to be a medium of exchange. Okay, so if you own $100 and you can't spend it, it's not $100. It's just a piece of paper. So if you own Bitcoin and you can't buy a 6-pack of beer with it, like walk down to the local grocery store and buy a 6-pack of beer, if you can't do that, it's not money. Now you own some sort of asset, but it's not money. It's the first rule. If you can't easily trade it for something else, it's not liquid, it's not money. You can't have illiquid money. Money provides liquidity. So if you can't buy something with it, it means someone else isn't selling, and it's just some asset. Like you can't exchange your house for a loaf of bread. You can't divvy up your house for a loaf of bread. Okay? So whatever. So you own some sort of asset that appreciates and depreciates, but it's not money. And therefore, because you can't exchange it, it's illiquid. Now, two, there's store of value, as you guys know. Okay? And three, it's a unit of account. Okay? Basics, right? That's the definition of money. So I don't quite consider Bitcoin money yet, but I'll trade the heck out of it if you pay me money, right? If I can convert Bitcoin into cash, that's why I like, like trading it with Trader's Way, for example. Let's go here. Okay, here's the thing I like about it. I can buy this or sell this, and I get cash in my account. Okay? That's the part I love about it. I can trade this on Trader's Way, and they don't stuff my account with Bitcoin. And then I'm like, now what the hell am I going to do? Chemistry, don't distract people. Don't distract people. That gets on my nerves. I'm glad you have experience there. But don't distract people. This is my show, baby. Cool. Thank you. I appreciate you and your respect. Okay? Yeah, sure. Okay? That's all. I'm trying to accomplish a goal, that's all. So I don't need people distracted, that's all. Cool. So if I sell this and make money, I get cash. Cash. Cash I can go to the store. Right? Buy that Hustler magazine and a pack of diapers. Whatever people do. I have this funny, there's a gas station nearby that sometimes I go to buy propane and all that kind of stuff, and I'll pick up some beer. There's this woman there that, she's so different from, I don't know, the people I hang with. So I walk in and I'm like, oh my God, it's hot out there. She's like, yeah, and I have hot flashes. I'm like, oh, yeah. Didn't need to know that. So we'll talk about her hot flashes while she's like scanning my beer and I'm exchanging the tank. She's just like, there's always something. There's always something. It's just really funny. She said something to me the other day when I picked up some propane and some beer. And I don't know. It was funny. Anyways, I forget. No, like she's just like speaks the truth, even if it's stuff you shouldn't. So anyways, I love the cash. If I sell Bitcoin, I can get free beer. Great. Right? When I'm cold. All right. We'll get off that. Tired, man. I need a good nap today. I feel free, man. I feel free. Yeah, I don't see why it can't become more liquid, but you're going to need a more mature market for sure. Yeah, so like, I'm tired because I've worked like a dirty dog for like 2.5 weeks straight. Yeah, VTGs. I just went through finals week at Harvard, so hell week. Well, so Love says I think $100 price for Bitcoin will come. Well, I wouldn't make such a radical statement, but the idea of halving, which was created at the very first, at the very beginning of Bitcoin, was designed to create scarcity. And scarcity, you know, when you do supply and demand, low supply raises price or value. It's actually value, right? So, so like I said, I wouldn't make a radical statement like that. I don't like. I'm not a big fan of radical statements, anyways. I don't even like kind of giving you my thoughts on politics and what the White House may or may not do. Like I don't. I even hesitate at that. But like, I wouldn't say such a grand statement. Like so many people are like, oh, you know, euro dollar, will it go to parity? Who gives a crap? If what is parity to you? Parity is important. Like no, it's just another price. Um, but I'm not sure if Bitcoin would go to $100 unless it failed. Okay? I think you would have to destroy demand. It wouldn't be a supply issue because by lowering supply, you are raising the price. Now, how does halving lower the supply? The way I understand it is if you mine Bitcoin, you earn half as much today as you did on Friday. So less people are enticed to mine Bitcoin. There will be less Bitcoin. So, for example, what if today it was announced all Uber drivers will earn half as much per ride? Do you think people will drop out of being an Uber driver? Okay, so that's a supply, right? That's a supply issue. So this is probably I don't have a good chart for this one. Just trying to get this so maybe I can draw. I don't have a blank template anymore. Got to create one. Well, I guess we'll just do it. Hang on, let me do a blank one. When I'm cold, cold when I go, oh, oh, I don't think this will work, right? No. I don't think if I do multiple, it actually deletes, does it? Yeah, it didn't think so. Okay, and then I guess we'll just do that. All right, it's fine there. All right, so very quickly, if you're looking inside here, don't look at the prices. Don't look at the line. You know, I can even fix that. Let's do that. Make this a line. Make the line white. Can I grab it? Template. Save template. All right. So let's do this. So we have a chart. Is that supply or demand? Always label your charts. Okay. When something's very expensive, you don't buy a lot of it. So anyways, so if halving reduces the number of Bitcoins being produced, the value goes up. Okay? As quantity goes down. So, for you to drop Bitcoin to $100, so now you're saying, how do we shift this radically from 10,000 to 100? Well, you either flood it with supply so every unit of Bitcoin is worth less, but halving is designed to prevent that. So the only way to shift that is to really shift demand to way down here. Okay? You really have to kill demand. I mean, destroy it. Like, to get it to $100, people will have to laugh at you. Laugh at you because you mentioned Bitcoin. And right? There'll have to be like shame. Okay? It'll have to be like some shame involved. Like, you have to be embarrassed to have Bitcoin. So you have to understand how these things work. So you can't just say, oh, I think it's going to be worth $100. Well, you can't say that. No, I'm not saying no, but you have to radically change the entire culture of the market. Okay? And it's not a supply issue. It would have to be a demand issue. So Random Gamer says, well, they can do that by blocking any purchase of Bitcoin. Well, that also means it's not money because it's not liquid. So you just have to understand, if you're saying that, you are talking about a demand side of the equation. Okay? If you believe it's a legitimate asset, then it'll never hit $100. Unless you've destroyed all demand, and therefore it's not legitimate by definition. Okay? So just make sure you understand what you're saying, because the guy, whoever, what's his name, the anonymous dude, I forget the fake name, but whatever, the guy that invented Bitcoin was smart enough to put halving into the process to always reduce supply and increased price. Okay? Now, if no one wants to buy Bitcoin because there's a social stigma to it, because it's the dumbest thing ever, well, halving ain't going to save you. And it'll go to 0, not 100. Or whatever. Okay? So I don't like to make radical predictions. I'm just saying make sure you understand what's happening and you can analyze that as it's happening and you can make decisions. Okay? But saying it'll go from 10,000 to 100, it's irrelevant. It's ridiculous. What's more important is we're at 9,000. Where are we going to be in a week? And let's convert some of that crappy Bitcoin into some awesome cash. Okay, that's all I care about. Okay, I don't care about your political opinion, but let's turn it into some awesome cash. Okay, I don't care if you love the Queen of England or if you hate the British Prime Minister. I don't care. Let's make some money. Make sure you back it up with relevant information that will contribute to that. Radical statements are wild and crazy guesses. Not really interested. I don't even want to hear it. Okay. All right. Look at this. Dollar must be weak. Okay. But here's the weird thing. Why is CAD so weak? It's getting destroyed, huh? Very interesting. Yeah. Change topic. Very, very, very interesting. One of the things that's happening today is the Fed is starting their bond buying program. Today is the day, guys. Money is entering the market. The supply of money has gone up today. Isn't that interesting? No, you got to pick a side. So this, I think this USD Swissy, you're going to have to say it's not Swissy strength, it's dollar weakness. So that's risk on. Pound dollar, euro dollar, and many other things are going up. CAD is strangely weak, so keep that aside. But Kiwi dollar's going up. Aussie dollar's probably going up. Euro dollar's going up. Pound dollar's going up. USD Swiss franc's going down. But today, the Fed is pumping money into the market. Okay? So maybe that's what's going on, huh? When I'm cold. Well, it's still money, right, Roger? Lugo says, hey, corporate bonds, whatever, it doesn't matter. It's just money. Money supply will go up. Where did the Fed get the money? The money didn't exist yesterday. So the supply of money has gone up, the value of the US dollar goes down. Pretty simple math. Okay? Okay? Yeah, there's is there a trade battle going on between Australia and China right now? It's like over beef or something, isn't it? They have a beef over beef. Oh yeah, Daniel says, yeah, China cut down meat imports from Australia. Yeah. And US and yeah. So here's what I always say. You know what you want, you know what you're analysis tells you, you know your fundamentals, you know your bias. Pick your price and be ready. So Aussie goes up, Aussie goes down. Aussie was ripper hot earlier, now it's not so ripper hot. Well, that's what happens. If you're ready, you're buying the support or you're selling the resistance and you're doing fine. So CAD getting crushed, yen dropping, so that's risk on. Dollar dropping, that's risk on. But Swissy's going up. So this is weirdo. This is weirdo. But I love the yen weakening. I love the dollar weakening. Okay? Money flowing into Europe. Isn't that funny how we just talked about this, a day or two ago? Maybe last week. When it's risk on in the U.S., money flows to Europe. That must have been in the live trading group. I think we're talking about that, the historic closeness I was talking about. Oh, so how do you trade that? Well, it should be pretty obvious. We can go here. Let's do this. The current target is 110. That's it. Let's do it like this. Like, let's filter everything. Swing trading bullish bias. Okay. There's the ender. There's a feeling. And I'm totally ready for my nap now. Oh my God. I haven't slept enough. Haven't slept enough. All right. 110.66. Bullish profit zone aggressive. So I would say between 110. Oops, didn't mean to do that. Between 110 and 110.66 is my kind of my general thought process. Okay? So to achieve that, okay, you want to look at this. And you're going to make your plan based on something like this. It's the rest of the week. Yeah, so because the exams are all now online, that what they did is last night they opened a window, and any time between now and Friday you could start the test, but once you started the test it was on a timer and it ended automatically, right? So like you can start it whenever, you can take it whenever you want over the course of 5 days, but then after the 5 days is over it submits like by Friday at 8 or something. So being me, I'm totally prepared. So the window opened, or the 5-day window opened, and I took the first hour. Boom. As soon as the exam opened, I was in, took the test, boom, dropped the mic, I'm done. Thank you. Don't need more time. So. Don't need more. Don't need more help. All right, like I'm actually to the point where I'm a bit dizzy right now. So I think I better take a nap. I know some of you guys have bought stuff from MetaTraders and are having problems. I know some of you guys have bought stuff from FX Bootcamp and are having problems. All this kind of stuff. I understand, and I thank you for your patience. I'm going to work on it today and tomorrow. I also want to launch the new installer for MetaTraders. I'll give that to everyone that's subscribed, over, I don't know how long it's been now, almost a year. So everyone will get the new templates, everyone will get the new installer. And for example, when you log into your back office, if you will, on metatraders.com, now the way I envision having it, there'll be a button. It'll say, "Hey, are you MT4 or MT5?" And you'll say, "Oh, I'm MT5." Boom, and it'll just install everything for you. Okay. Yeah. So I have to sleep. I need some sleep. I have to sleep. I need to sleep. But I'll be on it today. I'll be on it tomorrow, and everyone should be caught up on their support. And then I'll work on launching the new MetaTrader thing, and that'll be good. So in the description below this video, it's like your last chance to get that 80% off discount to all the training courses. And there's also, by the way, a wink, wink, nudge, nudge, an offer for you to join the live trading group. So get off the fence, dude. And I will see you guys tomorrow. I'll see you guys tonight if you're on the live trading group. So have a wonderful day. Glad that you're alive. Glad that you're safe. Glad that you're beautiful. I'm glad that you're in my life. I gotta go. So, peace on earth. May the pips be with you. May our profits be above average. Cheers. It's less than 10,000.